So today we're going to jump into talking about income protection, and the income protection we're going to be talking about is has to do with what's called disability insurance. So before we do that, I just want to jump into an agenda, introduce the gentleman across from me, and talk about basically what we're going to cover today, why we're going to cover it, and give high-level overview. So as you see in the agenda, jump into some company introductions in just a second. Most of you that were invited, at least to the live portion of this, know who I am. Some of you know who Jonathan is already. And then, maybe if you've been sent this recording, you have no idea. So we're going to do a quick intro into our companies, talk about what the product is that we're talking about today and why we're talking about it, why we think you should care. And then we'll jump into some specifics on the product. So to start, my name is Tyler McGee. I'm the president of Unbridled Insurance, as you can see there. And as you can see across from me, both in person and on the screen, is Jonathan Wield, the managing partner of Unbridled Wealth. You'll notice the Unbridled logos look the same. The wording looks the same, and there's reason behind that. Our companies are sister companies, and we're a part of a much bigger family of Unbridled companies. So my company, Unbridled Insurance, right here in Dallas, Texas, and we have a presence in, through business, we have a presence in over 20 states now, but we have people in 3 states, and we are one of the youngest Unbridled companies. And I'm going to kick it off to Jonathan to introduce himself. Jonathan, thanks for being here. He flew in from Denver, Colorado yesterday to be here for this, and we're going to make some other content. So thank you. Just want to say thanks for that. And I want Jonathan to tell, Jonathan was my introduction to Unbridled companies. And I want you to tell just a little bit about the story of how Unbridled got started, how we got connected. And again, thanks for being here.
Yeah, you're welcome. It's always fun to travel to the great nation of Texas, especially in early May, because it's not too hot, but it's hot enough.
Right.
So I'll give you a little bit of a background on the Unbridled family. It is one of the most common questions I'm asked is, so what does Unbridled actually do? And part of the reason is because we are across several verticals and industries, and we actually now have 27 entities in the brand. So just to give you a little insight into how we got started, we're about 20 years old. We started within the event space, so corporate events. So Unbridled Solutions, you can see on the screen there, that was the kind of the OG, the original company. Across corporate events, we do about $100 million a year in revenue, have offices in 4 states. And so that was really our bread and butter until it was 2014 when we purchased an office building, which was a historic building in Denver, Colorado, which is where our headquarters is. And we discovered a strategy kind of accidentally at that time around historic preservation tax credits. And I mean, that's not the purpose of the call here, so I won't get into the weeds of how it worked, but we basically discovered we could earn 50% back of all of our renovation costs in the form of tax credits.
That's insane.
Which, anyone out there in the real estate industry, that is a big deal when you can buy a building. Anyway, I won't go down that rabbit hole. So got into the real estate space and started basically purchasing any historic building that was cheap to buy, expensive to renovate, utilizing tax credits. And part of that deal is they had to be income producing properties. So we started launching businesses within them. So for example, the Hotel St. Cloud in Canyon City, we bought it for $88,000.
At some point, so actually I just decided we're going to do a full, this is actually why Jonathan and I met, is because of what's Unbridled's doing in Canyon City. And it's one of my favorite stories. So after this, we're going to sit down and do a full video, talk about that, because it may be my favorite Unbridled company in a year. And so anyway, we'll get more into that, but.
So that was part of our model, and really what underpinned all of that was this concept you may be familiar with called infinite banking, which again is not going to be the topic of discussion today, but we have a lot of content on that. Became a banking system using permanent life insurance, which allowed us to purchase quickly, use it as a funding mechanism within those buildings, and so that became the genesis of Unbridled Wealth. And so Unbridled Wealth is really helping business owners, entrepreneurs, families set up these private banking systems for themselves or their businesses. And what we discovered when sitting down with our clients was there was also a huge gap and need within the risk space.
Right.
So most of us have life insurance. Most of us have health insurance. You got auto insurance, home insurance, and So providing a one-stop shop, one consistent brand and service. And so that was a lot of our partnering together was around that topic.
Yep. Yeah, for sure. I just decided to enter into the insurance space and to buy an agency. And again, we'll talk more about that at a future time. But that's really what drove us to partner together. And one of the things that made me fall in love with Unbridled as a company is the structure of the company. All the things that you just saw on the screen, if I throw them back up, So I have an affinity towards all of these companies. I love the live virtual event space. It's why I want to bring that product, if you will, into our finance space. It's why we're sitting here today. But I also love real estate. Real estate is my first or second favorite asset class. It depends on the day. But direct business ownership and real estate are my two favorite asset classes. And so
business ownership's more like golf. When it's going good, you love it. When it's going bad, you hate it.
Yeah, no doubt.
It's an up and down.
No doubt. But I want you to talk a little bit more about the structure of how Unbridled is set up as a company, the culture, the values, how we spend our money, because that was really for me what caused for me to say, hey, a lot of what Stan, who we can talk about, the founder of Unbridled Companies, a lot of what he's done over the last 20 years was what was on my heart to do. And I remember we had this conversation. I was like, why reinvent the wheel? I feel like we can do so much more together than we can apart. So tell them a little bit about kind of how the company's structured and go through the slide and just explain that a bit.
Sure, yeah. So the basic premise behind all of our companies is this idea of destiny, authenticity, and radical generosity. And so what we mean by that is, we believe everybody has a destiny. Okay. So they're created with purpose. There's intent for their life. And so our goal as a brand, as a company culture, is to discover what your destiny is, at least in this season, and help you achieve it and walk alongside you. Right. Because you're actually going to be more efficient and work harder if you're walking within what you're supposed to be doing. Totally.
And I tell our people that I know that I would say the majority, maybe not even the vast majority, because people spend a lot of time in our industry, but for the majority of people, I know that there's probably a time clock on them. Yeah. And they may outgrow us. Their passions may change. Their destiny may take them to a different company, a different industry, et cetera. Absolutely. And I've told all of our people, and I want to keep this as we grow, that when you start to feel that, come to me, because I want to be a part of advancing you into wherever you're supposed to be. If you're not supposed to be here, if your time at the company has come to an end, I want to help you in a healthy way step into that next season. And I don't think it's been modeled very well at scale. Yeah. Well, employees and employers doing that. And that's a lot of fear-based control. Totally. And I would say that's so I've been with the Unbridled brand for 8 years now. And when I met Stan Bullis, who's our founder, actually one of my favorite stories. We were sitting down and it was kind of a semi-interview, but over whiskey and wings, so not a super formal one. Stan interview. Yeah, exactly. I was like, hey, I want to come work for you. I'd heard kind of the legend of Stan Bullis, and at the end of that conversation, he said, it sounds like you're an entrepreneur. And I was like, I am. And then he asked a question that I thought was the end of the interview, which was, well, what's going to stop you leaving in 2 years and doing your own thing? And I thought about it for a second. I was like, you know what? You're absolutely right. That is what I'm planning to do. What I'm going to do. Yeah, I'm an entrepreneur. And he said, I've got a better answer for you. He said, I'm going to give you so much opportunity, you'll never want to leave. And so that actually ties into the authenticity culture that we have. Right. Of instead of being controlling and holding, we try and be transparent in everything that we do. I love it. And which in our industries is often not the case. Right. So being able to be transparent, share how we get paid, commissions work, how the industry works is a high value for us. Right. And then finally, we have radical generosity. And so the generosity for us looks like this doing good by doing well model, which means we give 20% of our profits back to charity every year. It's the first offering of our company. We retain 20% in retained earnings, which we hold for either future investment or for times of famine. Like when 2020 hit, the event industry, if you didn't guess, got hit pretty hard. We lost 50 million of revenue in 1 week in March of 2020. But we had enough retained earnings to support us through that. And then we distribute 60% to the shareholders. And so all of that sits on the basis of our core values, the cornerstones being community, character, change, and credibility.
So that's just a little background behind who we are as a brand. And so for us, I think it's about helping other entrepreneurs, other business owners advance in what they're doing.
Yep.
And we try to be the, strategists, experts behind some of the stuff that they really don't need to dive into themselves,
right,
but are essential to their business.
Yeah, no doubt. I love it. So I just want to give a quick introduction to Jonathan, a quick overview of basically what the Unbridled companies are, how we're set up, and let that be an intro into what we're talking about today, which is what is DI and why you should care. So
it is the most exciting podcast topic you can have, by the way.
I mean, it is unreal how riveting disability income insurance is. So, but let's talk about what it is, why you should care. I mean, disability insurance is a really important thing. And I guess the genesis of why this is happening today is we were in a conference in Florida earlier this year, and I was sitting in a breakout session where the guys started talking about disability insurance. And I realized in the middle of that session, holy cow,
Totally unprotected.
I am totally unprotected in this regard, because I started thinking about it, and I'm set up in a way as far as insurance goes that my major assets are insured.
Yeah.
Right. So we'll throw up a slide in a second and we'll kind of talk through that. But I thought I have a ton of life insurance.
Yeah.
So if I die, then my family's taken care of. Yeah. My business partners are taken care of.
Summer is an immediate multi-millionaire.
Yeah. Like it's fine. Like everything will, if I die.
Other than you not being there.
Financially speaking.
You're fine.
Yeah. Everything's fine. Yeah. But what happens if I'm disabled? Yeah. And it's funny. I was sitting in my, I say it's funny, but I was sitting in my parents' dining room 2-3 nights ago. I mentioned that you were coming in town, and my mom said, "Oh, what's Jonathan coming in town for?" I said, "Well, we're doing a video talking about disability insurance." And she said, "Oh yeah, that would have been nice to have."
Yeah.
And I had this light bulb moment. My dad had a scuba diving accident a year before I was born, and was disabled for a long time. Now he went back to work. He's done very well in business and spent the rest of his life partially disabled.
Yeah.
And I realized in that moment, had my parents had what we're talking about today, they would still be getting income from it to this day.
And probably the challenge of already dealing with a disability at that time and the income hit.
It's massive. Yeah. Because they were young, they were in their 20s, and they went through their savings really fast, relied on family to pitch in. And so it was just interesting to me that I'm like, here we are. It hit me in a conference, just thinking about myself today. And then we're making these plans, and my mom was like, just pointing out how important and valuable it can be. And I think it touches more people than we think.
Well, even in prepping for this webinar today,
literally today,
we have been talking about it. And I had an aha moment of almost the exact same thing of my mom was in a mental hospital with severe depression for 7 years of my childhood. And she was an ER physician, self-diagnosed, ended up being in a hospital for 7 years, but out of work for 12 years. And similar, we were going to have to file for bankruptcy, lose our house if family members hadn't stepped in and helped. And again, she would have had her physician salary covered for that entire time because she was the primary breadwinner.
Yeah.
It's crazy to think about.
I mean, it came up as we were literally talking. He's like, "Oh my gosh, this would have applied to my mom too." Let me throw this up. I was looking, and we were creating this graph. And if I look at my life, this is kind of what hit me in this moment at this conference. If I look at my life, I look at the house that we live in, the school my kids go to, the cars we drive, the food I put on the table, the money we're able to save, our lifestyle, the charity, which is a big one to me, the money I'm able to give, and ministries and missions I'm able to support, and then ultimately the money moving towards retirement. All those things are important for us as individuals, as a family. And my home's insured, my cars are insured, my business is insured in a lot of ways. And I'm looking at this, and there's one thing that feeds all these things. It's the foundation at which all these things are built on, and it's income.
Yep.
And my income is protected in some regard because I'm my own boss, and there's certain things that I can do to protect my income.
As long as you can show up to the office.
As long as I can show up. But what happens when I can't? And so I started looking at this, and I thought, man, what is this product? What does it look like? And today we're going to go over just that. There's really two big buckets that for our conversation today that this falls in: individual disability and what's called business overhead expense, BOE. But break it down for us, Jonathan. What is this product? What does it look like? And what can we expect as we kind of take a look at it?
Yeah, and we already mentioned this isn't the most exciting of all topics, but it is really, really important. And so I'm just going to ask you to just give us like another, 10 minutes or so. Yeah. We're going to get real practical in terms of how this works, because you may even be sat there thinking, I've already got coverage through work. And can I tell you the amount of people that are underinsured or completely uninsured? I was, again, one of them that had this discovery only probably a year or so ago. So we're going to get into the practicals a little bit. So what is DI, disability income insurance? And so individual DI is income continuation or replacement income. So if you get injured, you become ill, you'll basically get a disability benefit, which will cover your lost income until you're able to start working again, if you're ever able to start working again.
Right.
And for me, the biggest misconception that I've seen is, even for me, I thought, I didn't really need DI, because in my head it was, you get hit by a car and you're wheelchair bound for the rest of your life.
Paralyzed, right.
Yeah, completely paralyzed. And I was like, I don't know anybody that's been hit by a car and been wheelchair bound, fortunately. And so it's pretty unlikely.
Right.
But what I didn't realize is actually how common disabilities are. In fact, the statistic I recently read was 1 in 4 young adults today will lose a year plus worth of work due to illness or injury before they retire.
That's wild.
1 in 4, which is insane. And yet it is a topic that's just not really talked about. And most people are not fully protected. And I guarantee if you're listening to this, you're probably thinking either, no, I don't have anything, or I think I have something through work, but I've never actually sat down with somebody when I've asked, hey, what DI do you have? And they'd be able to answer me.
And actually knew.
No one knows.
Right.
So we just want to uncover a little of how it actually works and what's really important in your policy. Because the time you don't want to be trying to discover what it is
when you need it.
When you need it. Exactly. Yeah. So we're going to start with just the individual disability income. So you may be a W-2 employee, you could be a 1099, you could be a K-1 from your LLC, and you may have some level of coverage, but let's talk about what should be in your coverage and why it might be important to at least review it. So first off, definition of disability. So it could be 3 things, really. It could be total disability, which the parameters are pretty strict around what that looks like. Or it could be your own occupation.
Yep.
So an example of this would be you're a real estate agent and you break your hand. No big deal. You can still go to work. I mean, big deal.
Right. Does
have
feel
a broken
good.
hand. But you can still get in your car, go walk people around houses. But you're a dentist or a surgeon and you break your hand. Your income just effectively went away until you're fully recovered.
Right.
And potentially never could come back. So having that definition of disability, in the same way for a real estate agent, if you break your leg and you can't walk up and down the stairs, that could be a huge deal if you're showing houses. So making sure that that's dialed in is really important. The second thing is the elimination period. So this is basically how long you have to be disabled for before you start receiving this income. So is it 90 days? Is it 180 days? Is it 1 year? Is it 2 years? Do you even know?
Right.
And so if it's a 2-year elimination period, do you actually have enough funds to sustain you for 2 years? If you're a business owner, what happens to your business if you're out of work for 2 years?
Right.
And again, this doesn't mean like you're fully paralyzed. One of the most common things is cancer.
Yep.
If you're having to receive cancer treatment, and so there's medical expenses, there's the stress that comes along with it.
Right.
And you're not going to be working 60 hours a week if you just got a cancer diagnosis.
Right.
So how does that impact your business and your income?
Yeah, and I think that's smart. I think when you talk about elimination period, I'm really big on designing products to fit the person.
Yeah.
And
100%.
when I say I'm big on it, I mean we're big on it at Unbridled on every side of every side of our company. Mm-hmm. If you look at our client solution funnels across all the companies, but I don't think that every person needs this product. I really don't.
Yeah, absolutely.
I, in this season of life, absolutely need this product, both
100%.
individually and from a business perspective. I invited about 100 people that will get this recording who I thought, man, these people are probably prime candidates. And there's people that I saw on my list as I was going through LinkedIn that I didn't invite because I thought they really, it's not that there's no value, because if they used it, there's value there,
Sure.
but there's no need for it. Not truly need. Because to your point, if they had a 50-year elimination period, they would still have cash at the end of it.
Yeah.
And so like it's not a true need for them, right? And so I'm really big on like, who needs this and why? And I think that if you're looking at this, it's a great question of, one, would I need cash if it was indefinite, right?
Yeah.
If it was forever. But then the second part is like, okay, I probably could use this, but for how long?
Yeah.
And you start looking at this as like, can you take a 2-year elimination period? Would you be okay to float everything on the individual and or business side?
Yeah.
90 days, 60 days on on the business side, it can go down a little bit further to a shorter period. So anyways, just throwing that in is like, this is a really important thing to consider and look at, okay, what does this mean and how does it affect me essentially?
Yeah. And side of that, it's going to be the one after this is the length of coverage. So maybe you need it starting in 90 days, but maybe you only need a couple of years worth of coverage.
Right.
And so are you paying for coverage up until age 70 and only need a couple of years? Or the flip side,
right?
Are you paying for 2 years, but you would actually need until age 65 or 70?
Right.
So again, just making sure you know what you have and you're working with somebody that is customizing it for you. It's not just a generic, hey, sign here.
Right.
It's a 60% of your income, which takes me to next point, amount of coverage. So here was a big one for me. Often, if you've got some kind of a group or employee benefit with your company,
right.
This is why it's important to know what you have, because it's usually 60% of your income. It's still taxable, and it often has a cap.
So this part, the 60% part, kind of made sense. I thought, okay, when I found out that most employer provided DI was still taxable income.
Yeah.
I'm like, okay, well, all of a sudden 60% is not 60%.
Correct. Yeah.
And I mean, you told me your analogy, like what you had at Unbridled and how you realized you had a gap.
Yeah. Cause it's based on your base income.
Right.
There's often a cap. So like bonuses, commissions, none of that has an impact.
Right.
And so I discovered with mine, it was based on a cap of $100,000 income. So my benefit coverage was $5,000 a month,
right.
60%,
60 grand
taxable. And so it was this realization of, hey, if I was disabled for, let's call it 2 years, an injury happened. Like I had one mountain biking a couple of years ago, dislocated my shoulder up a mountain. Could have been a lot worse than it was.
Yep.
If I had a scenario where I was out of work for a period of time, I would have got $5,000 a month taxable, which and everybody's in different stages of life.
Yeah.
I got kids in a private school.
Right.
I got an expensive mortgage. I've just all of the things that are fixed expenses in my life.
Yeah. Your life doesn't work on $3,500 a month.
No, that's not really gonna sustain my current stage of life. And so that was a huge deal.
Yeah.
And we're gonna get into the business side of things, but I would have probably lost my income from the business too, because I'm
especially in that season
involved.
Right?
Yeah, exactly.
You didn't have, now you have a few more people on your staff. There's a little bit more redundancy, but then you're more in the season that we're in now. It's like, it was you and then a few producers and a couple administrative people. Yep. And, Stan was there, but he's not in the operations day to day.
Yeah.
And that's the position I'm in. That's like, this thing doesn't go if there's not the owner present right now. And I mean, a lot of people that I invited and maybe this video has been shared with, your owner operators, and like, we don't have to explain this to you. Your business doesn't operate in the season without you.
Yep.
And this is something I just really want you to consider, because at the end of the day, especially my friends and people in our community who are business owners, it takes a lot of work, a lot of energy. There's a lot of blood, sweat, and tears, if you will, to create and sustain a successful business. And to get to the season of business ownership where you don't have to be present is a massive milestone that a lot of people never see.
Yeah.
A lot of people, they transition out.
The hyper majority of businesses will never get to that stage.
Right. Which is not a bad thing in and of itself, right? If you're moving towards selling an owner operated business to another owner operator, that's great. But what do you do if something happens that puts what you've spent so much time and energy around and the foundation of what financially your family's built on in jeopardy.
Yeah.
And it's an important thing to consider. So
yeah. And here's one of the other misunderstandings as well is we think with disability income, it's only if you have that, paralyzing injury or terminal illness. And it also means that you can't work at all. For the example I gave for the real estate agent, what if you snap your Achilles tendon? Happened to my dad when he was playing rugby when I was growing up.
Yeah.
And so it affected how he could work for, it was, I think, 10 months on crutches.
Yeah.
So if you have something like that, and maybe it doesn't stop you working completely, but your income's reduced.
Yep.
Because you're just not as active. Maybe you have to hire somebody else to do the walkthroughs of the houses, and so you're going to have less clients. So this will actually cover you as long as you have a reduced income of at least 15% due to illness or injury.
Right.
So that could be really, really helpful as well. Knowing if your policy is guaranteed renewable or non-cancelable. So for you, if you saw that on your policy, you're like, don't really know what it means, don't really care.
Don't care.
Actually pretty important.
Right.
It determines whether your price of your premium is going to go up or not.
Yeah.
So can you lock in your price? The drastic difference between getting your DI locked in today versus waiting another 5 years. Every 5 years that you wait, the price goes up significantly.
Yep.
And you're locking in that price for life.
Right.
So making sure it's non-cancelable and that premium's not going to go up. And then there's fringe benefits as well. With certain carriers, certain policies, if you don't know, you probably don't have it. So making sure that you've got a lump sum payout if there's a non-disabling injury, like my mountain biking accident.
Yep.
That would have been just a lump sum payment to me to help if I have to take a few days off or a couple of weeks off work.
Or cover your deductible if you have to use your medical insurance.
Exactly
it's a great fringe benefit. And that's, I think one of the things I just want to drive home here is this can feel like a lot of information, get in the weeds. One, if it feels that way, I would say just like hit pause and ask yourself, is this a conversation I should have? And just reach out and let's just have a conversation. But the other side of that is it's important to know what you have, because not all products are created equally. Not all products with the same carrier are created equally.
Yeah.
And then there's ways to customize this to really make it work for you. So just don't assume that I have it, I'm good, or I don't have it, I'm good. Just know that it matters not only that you have it if you need it, but also how it's structured.
Yeah, no, I think that's part of the point here is knowing how it's structured, because especially for our medical professional clients, if you're a dentist, doctor, you probably have this in place.
Right.
But
what do you have in place?
Yeah.
Truly.
Were you sitting down and you're like, hey, I know you're quoting me $4,000 a year. I really only want to pay $3,000. What did they change in your policy in order to get to that price?
Well, and the other good point is that, we can write it in a way to where let's say you write it in your 20s and you make $100,000 a year, and now you're in your 40s and you're making $400,000 a year. Has that benefit amount gone up as your income has gone up, or has it stayed flat? There's just a lot of things to look at. So you threw one more up here. That's a big one for people, especially with higher education degrees. Once you get into MBAs,
legal degrees, medical degrees, that if you've got $300,000, $400,000, $500,000 in student loans, that if you lost your income, how significant an impact that would have.
Right. And this benefit can sit on top of
that goes on top of everything.
Yeah. Exactly. Which is cool. So, all right.
Cool. Well, I think we're going to shift gears and focus on the business owner.
Yep.
So maybe you could introduce that a little bit of how this can be a benefit and why it's important for not just a high earner or even just an earner, but a business owner.
Yeah. So this is one of the things that hit me that was specific to my aha moment, because I knew that DI existed as a product. And when I started listening to it, I'm like, man, I really should have this. And then they started talking about BOE, business overhead expense. And I thought, shoot, I also should have this, because like we were talking about earlier, my business isn't at the place where it operates without me yet. And so what happens to my business, forget about my individual side, because that's important. We've covered that. But what happens to my business if I'm not present? And how long can, everything keep moving forward or just stay stable and not fall apart? So what does it look like? What does it cover? So there's a product called BOE, business overhead expense. So if you as the owner operator have some type of injury or illness and can't be present, then this kicks in to cover your company's fixed expenses. So what are those fixed expenses? Things like your office, whether it's a lease payment or it's a mortgage, the salaries of your employees. If you have a fleet and that fleet is leveraged, so there's a payment on whether they're leases or they're purchased. Software subscriptions in our business, we pay tens of thousands of dollars a year for our pieces of software and all the licensing that's a fixed cost to us. Property and casualty premiums, we're no stranger to this, but your business insurance, your workers' compensation insurance, all those things that you pay that a lot of people have to have because of contract requirements, it'll pay those things to keep you going. Utilities, furniture, all this kind of stuff, all these fixed expenses, things that aren't covered, discretionary type expensive, like marketing budgets, things that basically you could turn off and your business would stay steady, are things that don't qualify. But there are a lot of things in this bucket that do qualify, and probably one of the biggest ones that we'll talk about as well is replacement income, which is huge for me. So can the business keep paying me if I'm not present? Okay, that's one question. But then the follow-up question is, well, who's going to do my job and how are they going to get compensated? So we can dive into that here.
Yeah, so I would say one of the things often said in this scenario is, well, I can always just sell my business if anything happens.
Right.
And it's one of those, I think people just don't actually think it through. And maybe their business is in a different place to mine, but if I become disabled or injured or sick and can't work for a period of time, that is not when I want to be selling my business.
Yeah. I have a friend of mine who has a great business advisory firm, and he talks about the way to get the most for your business is a long process, and you have to be very intentional to maximize EBITDA or maximize the value of your company. Having an owner operator who all of a sudden becomes disabled is not a way to do that.
And if you're behind on payments, if employees are leaving because you're no longer present or it's not being managed well, the value of your business can disappear immediately, overnight.
Massively. All right. And it can affect a lot of things. It can affect your financing. It can affect your employees wanting to stay if they see the writing. I mean, there's a lot of things that go sideways here, but case in point, like if you're an owner operator, again, this isn't a scenario for somebody who has a CEO in place and they're passive. It's a holding or they're just sitting on the board or something. So, but if you're an owner operator, the time to sell your company is not when you've experienced a disability. And for me, when we started talking about this, if I'm going to be out for a year, 2, 3, 5, I call it 5 years, it's a long time. Like life changes dramatically in that seat. But I've worked so hard and so long to get to this place. I don't want to just sell my business and have to restart if I can, because I have to. Right. If I have this and I have the opportunity to have BOE and I want to sell my business, I still can. It's not like a clause that says, well, now you can't sell your business because you got, so it just, the logic is not there for me. It doesn't make sense. And I think there's a much smarter way to go about it.
I was also just thinking about while you're talking, Tyler, I invested in a syndication just 6 months ago. And it was one of those scenarios I think a few weeks after I invested. So a passive investor into this business, and the CFO passed away. And fortunately in this case, I mean, obviously devastating for the team, for his family, for the company. They were able to have somebody step into his role temporarily. But it made me realize, like, if it was the CEO, the owner operator in this case, who was a lot of the intellectual property behind the business. If he had become disabled or even passed away, but I think he had life insurance on the business. That would have been, I would have lost my entire investment. So even the companies that you're invested in, are they fully protected and covered? And so with business overhead expense, it's very, very similar in concept, except this is a tax deduction to your business, and it comes to cover expenses for the business. So the elimination period is much less, because most of us, we need payout to the business starting quickly. So it's typically a 30-day elimination period. So once the operator is injured or disabled, can't work, I should say, for 30 days, then it will start paying out. And it will pay out up to $30,000 a month in just the base fixed expenses. So the things that you talked about, the rent, the office, the salaries, those kind of things. And that will typically be a 1 to 2 year period. So this isn't until age 65. So you do have a scenario and it's a disability that's ongoing for many years or the rest of your life. Well, 1 to 2 years might actually put you in a place to be able to build the business and either have somebody in place that can run it to create income or position it to sell.
One of the things that differs in this product as well for business owners, so you know, it creates a pool of money that can be used even extending beyond the time period, right? So let's say we'll use $10,000 a month as just a even number because it's easy to do the math. Let's say you're using 55555, right? And then you have a heightened expense. Well, that other 5 actually stands as pooled funds, right? So if you're 5 months accruing $5 more thousand, you actually have that $50,000 you can deploy into those approved expense categories. So it's a bit more flexible in that regard, and it's very helpful at the same time, right? So it is set up differently.
You can be even strategic with your taxes coming up and time of year of when those expenses are upcoming as well.
Right.
Okay, so one of the other big things I'd say with the business overhead expense, this is a rider, so even if you have BOE currently, if you don't have this rider added to your policy, it's probably not covered to replace your salary. So if you do need to hire somebody to replace your duties, this is up to a 6-month coverage, but up to $15,000 a month you could use to hire somebody, which, so for me, it's like I actually know a few people I have in mind that if it happened for $15,000 a month, and also because I've got relationship,
they'd step in.
They would for sure step in and cover me for 6 months. And so being able to have just that availability to do that, I think is valuable. Also, there's a business loan repayment. So I purchased equity from a previous partner in this business. And so I still have debt payments. I pay every month.
Same.
And so again, having that rider of, can I still make that debt payment to them to fulfill the purchase? And so those are the main factors when it comes to business overhead expense that a little bit different to the individual. But I think as a business owner, especially owner operator, you should have a little bit of both, making sure that your business is safe and covered, and you can also sustain the income personally to your family. Yeah,
I totally agree. And like I said, this was really just the intro, a deep dive that we wanted to be able to do. We'll cut it up. We'll send it out. Maybe you're watching this on a replay. And my encouragement to you is just reach out to start a conversation. I hope from one, if you know us, know either of us, or two, if you've been referred to us by someone that you know and trust, that like we're 4 people. I mean, that's why we do what we do. I enjoy the financial success attached to doing what we do. It's great, but at the end of the day, my world has to be built upon bettering people. And if it's not, then what am I doing? And as it pertains to, I mean, life insurance sits in this category for me. The amount of people that last year, my wife is like, man, I saw somebody else on Instagram lost their husband and they're doing a GoFundMe. Why are they doing a GoFundMe? Because they don't have any money. They can't cover the funeral. And that's just like,
I bet we've all seen that in the last couple of years.
It's insane.
I've seen it several times.
It's insane. Awful. And that's like, so this for me is just how can we add value to you? How can we bring you the information? What you do with it, obviously that's a stewardship decision that each person has to make. But I just want to say thank you again to Jonathan to coming out. Thank you to you guys for logging in and for being a part of this. We're going to throw up a contact information slide here on the screen. There's my email, my phone number. Both of our websites are listed there. So if you have questions, if you want to start a conversation about, hey, I'm not sure really, I've got some more questions, and just reach out to us. We're available. Love to connect with you and just hear about your life, your family, your business, your whole world, and how it's put together, and see what kind of value we could add. But with that, we're going to sign off. So thanks so much for joining us again. We're so thankful that you're here and that you took time to watch this video. Reach out to us if we can do anything for you, and we'll see you next time.
Awesome. Thanks, everybody.